The future of ASML is bright and full of potential. As the tech world navigates rising geopolitical tensions and unprecedented advancements, ASML stands strong at the center of the semiconductor revolution. This could very well be your next big investment opportunity. Let's break it down. ASML Holding is not just another tech company, it's the backbone of the semiconductor industry, providing cutting-edge lithography systems that enable chip makers to create the next generation of processors and memory chips. Headquartered in Veldhoven, the Netherlands, ASML operates globally, serving major markets in Asia, Europe, and the US. The company's extreme ultraviolet lithography technology is nothing short of revolutionary, allowing manufacturers to produce chips that power everything from smartphones to AI supercomputers. But as innovation accelerates, so do the challenges. Let's start with how ASML performed in Q3 of 2024. The company reported revenues of $7.47 billion, up from $6.67 billion in Q3 of 2023, driven largely by robust sales in their deep ultraviolet and EUV systems. What's special here is the ramp up of their NXE 3800E EUV system, which boasts 37% higher throughput. This level of efficiency is a game changer for chip makers, aiming to meet the surging demand for advanced chips, especially in AI and data centers. Despite strong sales, there are headwinds. New orders are slowing, resulting in fewer down payments and rising inventory levels. This has dented ASML's free cash flow conversion, which fell to 26% in Q3 of 24, compared to 33% a year earlier. While this raises short-term concerns, the company's increased installed base of systems provides recurring revenue streams from services and upgrades, a key pillar of its long-term strategy. The global macroeconomic environment remains mixed for ASML. Management has flagged a soft market for logic chips due to sluggish demand in the mobile and PC markets. Meanwhile, the memory segment is undergoing a significant transition, with customers like Micron shifting production towards high bandwidth memory and DDR5 to support AI infrastructure. These shifts are expected to delay revenue growth into late fiscal 2025. In addition to market dynamics, geopolitical tensions loom large. Starting in April of 2025, new EU trade restrictions on exporting advanced semiconductor manufacturing equipment to China could impact ASML's revenue. Sales to China, which were expected to normalize at 20% of total revenue, might face further reductions as these restrictions take effect. This adds uncertainty to the company's financial outlook for 2025 and beyond. Let's dive a little deeper in the financials. ASML's financial performance showcases the company's resilience in a volatile industry. In the trailing 12 months, ASML achieved 26.2 billion euros in revenue, reflecting a slight decline from 27.6 billion euros in 2023, but a significant rise from 21.2 billion euros in 2022. The company's gross profit for the TTM stands at 13.4 billion euros, with a gross margin of 51.15%, maintaining its profitability despite a marginal decline from 51.29% in 2023. Operating income came in at 8.1 billion euros, with an operating margin of 30.72%, a slight contraction from the 32.81% margin in 2023. This reflects the challenges of higher working capital requirements and a tighter market environment. However, the company's net income remains robust at 6.9 billion euros, yielding a net margin of 26.4%, showcasing ASML's ability to maintain profitability amidst geopolitical and macroeconomic headwinds. In terms of operational cash flow, ASML generated 4.8 billion euros in the TTM, reflecting its ability to manage operations effectively, even as working capital requirements increased. Capital expenditures for the same period totaled $1.98 billion, reinforcing ASML's commitment to innovation and capacity expansion. This strong financial position provides the company with flexibility to navigate uncertainties, invest in R&D, and maintain its leadership in semiconductor equipment technology. Free cash flow for the TTM amounted to 2.84 billion euros, reflecting ASML's capacity to generate cash for shareholder returns and reinvestment. Notably, the company has returned significant value to shareholders through dividends and buybacks, with 2.43 billion euros in dividends paid and 500 million euros in share repurchases during the TTM. Looking ahead, ASML's guidance for fiscal 2025 reflects some caution. Revenue is projected to range between 30 and 35 billion euros, with gross margins expected to tighten to 51 and 53%, primarily due to reduced EUV sales and trade restrictions impacting revenue from China. Despite these challenges, the company's growing installed base and ramp-up of advanced systems like the NXE:3800E are expected to provide long-term tailwinds. So, what's driving ASML's growth? AI remains a key catalyst. As companies expand AI infrastructure, demand for advanced chips, powered by ASML's EUV systems, is set to rise. However, the recovery in logic chips is expected to be slow, while memory markets face delays in the adoption of newer technologies. China's role in ASML's growth is a double-edged sword. While trade restrictions limit sales of advanced equipment, legacy chip-making equipment still offers revenue opportunities. Yet, reliance on geopolitical factors adds significant risk. Looking further ahead, ASML's innovation pipeline offers hope. The NXE:3800E system is expected to dominate low-NA shipments in 2025, while the growing installed base ensures steady demand for services and upgrades. These factors position ASML to weather short-term uncertainties and capitalize on long-term trends in AI and advanced manufacturing. As for their valuation, ASML stock has seen a noticeable pullback from its 2024 highs, largely driven by concerns surrounding trade restrictions and a slower than expected recovery in key markets like mobile and PC demand. These headwinds, combined with heightened geopolitical tensions and evolving trade regulations with China, have understandably created uncertainty among investors. However, it is precisely in these moments of uncertainty that opportunities often arise. At its current valuation, ASML presents a compelling case for long-term investors who believe in the transformative potential of advanced semiconductors and AI-driven growth. The company's robust fundamentals and leadership in the semiconductor equipment industry offer a solid foundation for its future trajectory. Analysts have set a price target of $917 per share. This target reflects confidence in ASML's ability to maintain its market dominance, driven by its EUV technology, ongoing investments in R&D, and a growing installed base. For investors with a long-term horizon, ASML's current valuation could represent an attractive entry point, with significant upside potential as global demand for semiconductors continues to expand. So, is ASML a buy? ASML stands at a unique crossroads in balancing its groundbreaking innovations with the challenges of an ever-changing global landscape. As the undisputed leader in semiconductor lithography technology, ASML's cutting-edge EUV and DUV systems are critical to the production of next-generation chips that power advancements in AI, 5G, and high-performance computing. This technological edge positions ASML as a linchpin in the semiconductor industry, securing its place as a vital player in the global tech ecosystem. However, challenges such as slowing order growth, geopolitical tensions, and evolving trade restrictions introduce elements of uncertainty. The upcoming trade restrictions on advanced semiconductor manufacturing equipment, effective of April 2025, could limit ASML's growth in the Chinese market, a key revenue contributor in recent years. Additionally, shifting dynamics in the PC and mobile sectors, coupled with cautious customer investments, may temper short-term growth prospects. Despite these hurdles, ASML remains an attractive long-term play for investors. The company's strong financial health, evidenced by consistent revenue growth, a net income margin of 26.4%, and an impressive return on equity of 47.68%, highlights its ability to navigate market fluctuations effectively. Furthermore, ASML's focus on expanding its installed base and introducing cutting-edge systems showcases its commitment to staying ahead of the curve. As ASML moves into 2025, success will hinge on how effectively the company can manage geopolitical risks, address customer demand shifts, and capitalize on emerging opportunities in AI and high-performance computing. For investors who believe in the long-term transformative power of semiconductors and are willing to endure short-term volatility, ASML presents a compelling opportunity to invest in a company at the forefront of global innovation. If you're looking to diversify your portfolio to different sectors and want to invest in the aerospace industry, then click on the video on screen right now, because this company is a golden opportunity and you don't want to miss it. Thank you so much for sticking to the end. And as always, happy investing.